Hi, Mark Patterson here with MHP Asset Management. The last time we spoke was actually on Easter Sunday, and I was sitting on my front porch in front of my house and really had just been hit with this COVID and the market reactions to it, and I was feeling a lot of stress for everybody, for all my clients who are feeling stress about it. So anyway, I wanted to just circle back, and now we're almost midway through May. And we've had a really nice market rally. People are feeling better, I know, because I have clients that are calling me, urging me to put some of the cash into certain positions. Well, I have done that. Just about everybody will notice certain things added to their portfolio during this time. But one thing I want you to make note of, and we're going to put it up on the screen here, this is the Dow Industrials. And I refer to the Dow Industrials because I know most of you refer to the Dow as opposed to the S&P 500. But anyway, the chart, what it shows is that, we had this big downturn coming off the highs, which the markets were doing great, and we have this huge adjustment downward. And then we've had the ensuing rally afterwards. But if you notice, the rally has come up to about 50% of the original loss. This is very, very common in technical analysis. It's called a retracement. So anytime you have a big move, either up or down, you will typically get a 50% retracement, a return to the middle. And it all goes back to that statistical thing that we talk about and that I write about on a regular basis, which the return to the middle, the statistical mean. So anyway, that's what has happened here. And so the markets, while they feel like they've done a good job, really what they've done is exactly what technically they're supposed to do: revert back to the middle. But what I want to caution everybody about is that typically the setup for this chart pattern is that we'll go sideways for a while. We'll have some good rally weeks, then we'll have some bad weeks, we'll have some good weeks and bad weeks. It just will happen. But looking more at the analysis of what's coming down the pike as far as earnings coming out in June, third quarter earnings, I just have to caution you that the economy is not going to look good. The damage done by the stay-at-home orders and the fact that we've had to deal with COVID, and it's really a new situation for a lot of the governors and for the federal government to have to deal with. So we've been working our way through it. And so the economy is not going to snap back. I mean, the markets have snapped back to a degree, but you would almost expect that. What I want to caution you is to become overly optimistic. The thing is that we're likely going to see another move back down. There's certainly no guarantee. If I could guarantee it, believe me, I'd be shorting everybody's account in the market. But that's not the thing to do here. What we need to do is we still need to leave a good amount of cash, liquid, in the account. And I believe after the next downward movement that there will be some good buying opportunity. So that goes for the stock market. It goes for the corporate bond market, which we've seen a lot of illiquidity issues in the corporate bond market. A lot of investment grade bonds have moved into junk status just because they've been downgraded because of the downturn in the markets. This is very common from the standpoint of, we saw this in the 2008-2009 scenario where everything moved down and we had a lot of illiquidity in the corporate bond market. Same thing has happened now. Now I've been able to go in and pick up a couple of quality holdings at discounted pricing, but I'm not ready to jump feet first back into the bond market or the stock market at this case. So in building a portfolio, we still want to use modern portfolio theory. We want to use uncorrelated to non-correlated asset classes to mix into the portfolio, because as we know, what that's going to do is going to reduce the volatility and increase the returns over time. So anyway, I hope this clears up a few things, and the reason why maybe clients haven't seen me pile in both feet forward with money into certain positions, because I think we're going to get another chance. Anyway, hope you all have a nice spring. Please give me a call if you have any questions. You know I'm always there for you. Anyway, this has been Mark Patterson, MHP Asset Management, and I'll talk to you soon.